Hey guys, AKIL'S here. Welcome back to the Trading Edge, your weekly look around the markets. Got some cool opportunities to share with you today, including a fun one to start with, some short and sweet ones in the middle, and a very interesting one at the end where we're going to revisit something that we spoke about in a previous video, a technique that I'm working on. Before we get started, I want to say a big thank you. We're getting closer to 55,000 subscribers and almost 5 million views for the channel. So keep up the support. My goal is to try to get there before the end of the year. So like, subscribe, share, comment, all the things you need to do to help us get to that mark. So let's get started here on dollar Canada, the loonie. We're going to take a look at a classic price action trade. If you guys are brand new to the channel, I am a price action trader. I don't use a lot of fancy indicators or anything like that, although I'm going to throw some on my chart a little bit later at the very end. But typically I am using price action, the candlesticks, support, resistance, supply, demand, to make my trading decisions. And it all starts with a four-step process we call IPDE. Identify, predict, decide, execute. And if we look here on the loonie on the daily again, you can see that we ended the week with a break and close below a previous level of structure, right? We looked at this pattern this past week. It's a lot of P's in a row. We came up here, had another breakout pattern. We spoke about it could break out to the upside, to the downside. It was 50-50. Well, the market chose the downside, and now we made a key violation. So the break below, close below this level, identifying that, I, allows me to predict, P, that price is likely to continue lower. And that's going to set up my confirmation bias for the trade, meaning that I want to be either a bearish continuation trader looking for a way to capture the move down, or if I'm a counter trend trader looking to get bullish, I'm trying to identify where that downward move is likely to terminate at. That way I can get bullish. So it doesn't matter whether you're a bull or a bear or a trend continuation or counter trend trader, technical analysis is the same. You're just using it in a different way. So the first place that stands out to me to the downside, the next level of structure, is going to be this little consolidation zone right here. Price action back in late last year, came down, did a nice little double bottom action before going on our way. That same zone, I'm going to delete it because now I can't see the levels that I drew on. That same zone is going to be the zone in which I would project price action to go to. Now, what I want to do is, within that zone, I want to really identify kind of I don't want to say the perfect price point because we're not trying to pinpoint perfect prices in the market, but I want to isolate that zone and make it smaller. That way I really have a target level. So we'll end up doing that a little bit later as the market shows its hand and more things get created. But a few things we can do right now is, one, take on a Fibonacci extension from my previous swing high to my swing low down here and back up. You're going to see a 127 extension right around that 135 even handle. Speaking of the 135 even handle, that's a psychological number. We can also bring some volume in as well. We'll take it from the lows here to the highs, and we can see that right within this zone, a little bit lower, we start to see our volume spike. So as of right now, we can isolate this zone a little bit, eyeballing that 135 even level, but as price action or as this potential trading opportunity continues, we'll be able to add more and more clues to isolate that level and get a really specific zone that we want to shoot for. Now, real quick, how do we trade this thing? Well, let's go down to the 4 hour. You can see that either 4 hour, hourly, whatever is your preference. You can see that price action is starting to lose momentum. You can see the wicks on these three candles to end the week, right? Little bull rejection, little bull rejection, little bull rejection, right? No doubt some profit taking being had right here. What I would expect is a little bit of a retracement, right? A retracement meaning some relief. Price action moves back to either this level right here, this little pregnant pause. I'll zoom in so you guys can see this a little bit better. Trying to get better with zooming in, right? I'm used to seeing things from far out, but makes for better television, right? If we zoom in. This level right here would be a good first level to look for that retracement to terminate and look to catch the move down. Or a sneaky level would be this, and this is going to be a little bit advanced, and it's going to be hard to see on this time frame, but I'm going to take my Fibonacci extension tool again and drag it from my swing low backwards to this swing high. This is called a Fibonacci inversion. It's pretty much just like a fake out in the market, just to keep it simple. Don't worry about what it is. That's what it is. But you can see this level, this 1618 in red, which is what we're looking at. This comes in at a nice level as well. So this would be the higher level that we can look for a retracement to before looking for that move down. So a few different options. Obviously, this is going to be the first one right here. And if we do get that, wrong tool, there we go, right here. If we do get that, we can look to trade it down to those 135s. Aussie dollar, we're going to start here on the 4 hour. You can say that Aussie dollar has done two things. One, it has broken and closed above a previous structure high, this guy right here. Two, we have come to another previous structure high, right? So if we go back to the IPD example that we looked at in the first example, how many times can I say example? The break and close above here allows us to predict, right? We identified a break and close above. It allows us to predict that price is likely to go higher. The next part of that prediction is if price is likely to go higher, then where are we likely to go higher to? We can identify this zone right here, and that's where our bullish projection stops, because you don't want to jump when you're close to the ceiling, right? So it's important. We've been having conversations like this all week in our live trading room about understanding the full range of the trade, right? So it's not just like making a directional prediction. So many traders just think, hey, like I just got to make a directional prediction. I think we're going to go bullish. I think we're going to go bearish, and I can trade it. Well, there has to be room for you to make profit as well. If you go back to the jumping while you're close to the ceiling reference, I don't know if you've ever done that, but if you climb a ladder, or perhaps you live in a house with a very small ceiling and your head is a foot underneath the ceiling, if you jump, you're not going to make it pretty far. You're going to knock yourself out and be concussed and, maybe break something. I don't know. But anyway, there's not enough room for you to actually jump. So it's the same thing with trading, where you don't want to be involved in a trade if there's not enough room for you to actually make profit. And this is why we have that whole risk profile where we look at entry, stops, and targets. And unless we have that full information, we can't really decide on whether it's a good trading opportunity or not. So this would not be a good buying opportunity because we're already at structure, but it could be a good selling opportunity. Now, keep in mind, before we get on to the lower time frames, we do have a higher level of structure right here. We know we call this overlapping levels of structure. Whenever we have overlapping levels of structure, the more important one is going to be the higher one. So just keep this in mind. But the trading opportunity that exists here, if we go down to a lower time frame, is kind of a really small, quick one, right? Price action came to this level. We've put in two doji candles right here, which a doji candle is a neutral candle. It is a sign of indecision. The market is having a think. It doesn't really want to go bullish. It doesn't really want to go bearish, and it kind of ends up where it started, right? Imagine a game of tug of war, and like one team pulls it and then the other team pulls it, and then the whistle goes off and the flag is right in the middle where it started. Stalemate, right? We had that stalemate, which doesn't really mean much in its own right. But what is a little bit more important, by a little I mean a lot more important, is this candle that came after it. And that is going to be a lower low, lower close, a break below, close below, showing us that the bears have won that session. That is an entry reason as well. So if you are someone that's looking to take an aggressive trade, right, this is a good entry reason right here. Again, this is not a grade A trading opportunity by any means, especially with the overlapping level of structure. But if you're someone especially who uses a small stop loss, you can make this work, right? So you have the entry, but again, we need the three things: the entries, stops, and targets. Let's do targets first. Targets, well, where can we go to? Well, remember this previous level, this powerful level of structure resistance that was broken? Well, that's the level that we would expect to act as support, right? Remember the video we did on ice zones where there's a frozen ice and it is resistance for fish trying to jump out, but on the other side, it is support for humans trying not to fall in. And once a fish jumps out, it turns into a human not to fall in. Yeah, examples. It's early Saturday morning, guys. Give me a break. But the same level of previous structure of resistance, Saturday morning. The same level of previous structure resistance, once violated, right? I'm going to do some cool stuff right here. I love doing this. It takes too long, but I'm going to do it anyway, right? Once violated, we should look at it to become our next level of structure support. Look at that, it turns green. If you have the VS1s, this is easier. But yeah, so this would be a decent level to look for potential targets at. Now, the stop loss has to be correct as well. I looked at this myself. The stop loss is going to be a little bit too long. My stop was going to be at, was it 165.11? I think it was, which doesn't give me a one-to-one risk reward. That's just my rules for stops. I can't do anything about it. That's literally as small as I can go on a stop loss. But if you're someone that uses maybe a smaller stop loss method, a couple pips above the high, and you can get something right around here, then all of a sudden you got a 1.5 or a little bit close to that stop loss, which isn't a bad risk reward profile. So something to keep an eye on here. One more thing to add to this, and this is going to be data dependent and how you draw it dependent, right? You may have a cipher here. It's going to all depend on where you anchor your X leg, because this is very close, and I'll show you what I mean, right? So our X leg is our starting point. If you were to take it, let's say from right here, this little red doji guy, right? And drag, well, we'll drag this on because we need it anyway, but drag our 127. This is going to be the one that's going to give us a little bit of trouble. If we drag our Fibonacci extension from this swing low, and I'll draw the rest of the pattern on in a little bit, don't worry, we have plenty of ciphers to look at today, to swing high and back down, you're going to see that your 1414, and this is the level that cannot be broken and closed above if we want a valid C leg. You're going to see that your 1414 on this data, check your data, because specifically Aussie data is always a little bit different depending on your broker, but we do not have a break and close above that level, making this a valid cipher, meaning a potential advanced pattern formation that looks like this: X to A to B, B to C, and a C to D completion. However, if you were to drag this X leg one pip lower, let's say you're going to start right here somewhere. That works. Yeah. Then you would have a violation. So very important that you check that. One, for the validity of the cipher, but two, if you're someone that's looking for maybe a secondary opportunity here, right? Second week in a row, we talk about the aggressive C, right? I do a video telling you never to trade the aggressive C, and then 2 weeks in a row, I give you aggressive C examples. You could, I wouldn't, but you could theoretically look to hold a second target in advance of that cipher completing, and then stop and reverse to trade it back the opposite direction. So trade what you see. Great book by Larry Pesavento, but also always trade what you see on your charts, especially when it comes to like Australian data. I don't know why. I've spoken to Australian brokers. They don't know why either, but that's the one kind of currency that I see in the Forex market where the differences in quotes are a little bit more than your regular ones. Now, speaking of ciphers, I got another one to show you right here. We're going to make this short and sweet, right? This is the Euro Aussie. Long story short, Euro Aussie has been in this nasty consolidation. And in consolidation, typically we breed pattern formations, and that's what we have here potentially setting up. We have a swing low to swing high. That's going to be our X to A. We have our first pullback right here to the 3D2. That's going to be our A to B. We have an extension right here. That's going to be our B to C. And if price action were to come down to this 786, that would be the starting point of our cipher completion zone for a potential bullish cipher. And again, Euro Aussie is a big boy pair. This looks small, but if you're looking at targets on this, you're probably going to get over 100 pips would be my guess. If you just take it right at the decompletion, trade it up to a normal target 1 to the 3D2, 116 pips. So again, it looks tiny, it looks small, but these things pack a big punch. Pound Aussie, 4-hour chart. You're going to see the same thing here. So we'll be super quick in drawing it on because I know your attention spans are bad. X to A to B, B to C, and a CD completion down here for a cipher pattern. Speaking of your attention spans being bad, want to remind you one more time, right? Because you may not see me before it starts, but May 29th, 3-hour online trading workshop. Usually our workshops are 3 days, but because your attention spans are so bad, We're going to do it all in 3 hours. So I think we have about 100 seats left. This was when I last checked on Thursday. So make sure you sign up before they are all gone, because again, we do have a cap on how many people we want involved in this workshop. And if that cap is filled, you will not be allowed in. So go to tier1trading.com on desktop and you'll see kind of a page in the beginning where you can sign up, or just click the link in the bottom of this video and it will take you there. But May 29th, 3-hour online trading workshop. We're giving you a lot of information in 3 hours. Short, sweet, no fluff, no BS, just straight to the point. Now to the fun pair, pound dollar, the cable, right? Pound dollar is interesting, right? Going back to our IPDE, just to give you some more reps, you can see that we ended the week with a break above, close above, right? So we can identify a break and close above structure that allows us to predict that price is likely to continue higher. The next part of that prediction process that we mentioned before is deciding if price is likely to continue higher, then where are we likely to continue higher to? And this is where we run into a little bit of trouble here, because if we look left back in 22, 23, 22 here, we're right near another level of consolidation. So there's not a clear path higher to anywhere. So I'm not really sold on a nice bullish continuation trade. But what we may have is a little bit of relief, right? What goes up must come down. And when we see big moves, they are typically followed by retracements, pullbacks, periods of relief. And this is where we're going to get this is where we're going to get a little bit fancy with some of the things we've been playing around with in our live trading. We're going to go down to the hourly. I'm going to bring a few things on, right? One, I'm going to bring on my Keltner channels. Now, this isn't new. This is, we've done this before. I had a strategy called the double Keltner band strategy, whatever I called it. I didn't invent it, but I modified it from, I forget her name. She used to work for investing.com. Kathy Lynn, I think it was. Which is a pretty good strategy, just a horrible win rate. I'll actually share a few podcasts. Now that I say it, I'm going to hold myself to it. I'll put that podcast out Monday for you to hear about the story of that very profitable but very mind-numbing strategy, I guess you can say. To make things short and sweet, think of volatility bands as being like force fields that when price action gets to those force fields, it's more likely to get some relief than to run through. More likely, right? That's the key word, more likely. So we have that setting up, and we also have our RSI doing something funny. So if you're someone looking for relief, looking for a pullback, here's something to pay attention to. The double Keltner band strategy, what I require is a break and close above our band here, and then we need a lower low, lower close. So if we get that, that's a signal in its own right. But something else that we could have is a rotation on the RSI. Now, my live room members are calling this the neck breaker. It doesn't have a name yet, but neck breaker sounds cool because we can insert like a sound of like a neck breaking. Weird, okay. But what we're looking for is this, right? We're looking for a rotation in our RSI the same way we look for a rotation in trend. So this area right here is our most recent new structure high on the RSI. We then have our pullback, or we then have a pullback after that. If this is our new structure high, our previous outside return is here. So in order to have a violation in trend in real life or in the RSI, we need that outside return, this level, to be violated, which happens right here. Now, in order to go from, this would be called a bearish rotation. In order to go from a bearish rotation to a full-blown trend, we need the completion of our 3-point move, which would mean price action would need to violate this. So if the RSI violated this level, that would be a sell. And the idea is that it would mean relief from here. We're going up, we're going up, we're going up, kind of like a rising channel. And then we're starting to retrace a little bit. So just something to keep an eye on. I'm not saying this is a good trading opportunity. I don't even know if there's enough room to make it a good risk reward, but we're always playing around with the charts. I call it playing in the sandbox, and this is just something that we've been working on and combining kind of two things at once. So it's something that may become a strategy for me later in time if I ever have time to properly test it. But for the last year or so, it's been a theory, and it's been a theory that I really like. And now I'm combining it with the other thing that actually worked pretty good, but was really horrible to trade. So hope you guys enjoyed the video. Again, 55,000 subscribers is the goal before the end of the year. 5 million views is the goal before the end of the year. Help me get that. Share this on socials. Hit that like button. Leave any comments if you have any questions or any topics that you want me to do videos of. I hope you guys have a great weekend. And until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.